so more than 100 point overnight move. So from 7,013 to 7130, well over 100 points. So the choice in front of you is stand aside, which would be perfectly reasonable. What the data shows is it's a coin flip, whether you're going to either take a max loss or do okay. Or start, we want to use the model built for volatility. So that's the 40 tick model. And start at 7:05. So let the market settle down for 30 minutes. And then I actually kind of wish I'd built the model at 45 ticks instead of 40, but this is what we have. Again, standing aside is a perfectly reasonable choice. The data that we have shows, again, 50% probability of just getting whacked versus doing okay. The only wrinkle is that we now have this chop avoidance stuff, which I saw yesterday help a fair amount. Okay, so I'm a little more inclined to go for it rather than stand aside because of that. I kind of have to, since I'm doing system development here, but that would be a reasonable thing to consider. Is that what I saw yesterday was I was in the game. The chop avoidance kept me in the game by keeping me out of dangerous situations. And I had a shot at a decent day. The market was a little too volatile for the stops I was using. I had 2 cases where I got stopped out to the tick or stopped out a little bit too much of a pullback after moving the stop after hitting first target, that kind of thing. So I'm going to go for me. I'm going to start at 7:05 and I'm going to set up the more volatile model. So order placed long and at first target, so entry -5 now. That's a very traditional looking rational trader trade. Get extended, see a reversal pattern. Now it's scratch. We're not far enough away to get an add on this break here, assuming it's going to continue higher. The market's been, I think, there's a fair amount of movement, but it hasn't been super crazy. Not like it's so wild that you're terrified. It's been, and then having said that, look what it did right there. Oh dear. Oh, hold on, I don't have my, there we go. That's a standard 20-tick trail, so. All right, so 5 points. Here we are at the end of the day, and let's see, I think we saw this live. Let me go into chop mode here, so we stay out, which is nice. And then, actually, we may have seen this. No, I guess we didn't see this live. So we short here at 213. This is just a beautiful entry, but you can see the 20-tick trail is it's just too tight. 1, 2, 3. You need 4 more ticks. So you can take it out right there instead of catching this nice fall here. Now the impact here is fairly big. If you're using, say, a 30-tick stop, you're going to add on this break here. All right, so let's just calculate it. So your entry is 45.50. You'd get another entry at let's say 37.50, just to make the math easy. So that's 41.50. So 21.50 becomes the new target. Actually, what's going to happen is you're going to get taken out on this trail here. So you're going to make from here to there 30 ticks off of this level, and then from here to there too. So this pullback's a little too deep. You're not gonna hit your 80 tick target, but you can see the impact of the trail that's too tight. It's a very difficult balance to make. Yesterday I was basically flat. Other people, I had members using a 30 tick trail, and they ended up down on the day because you end up giving back that 10 more ticks. It's just enough if you don't catch that nice trade that day. It's enough for you to not be real happy with your result. Then things get a little messy here. Long here for a little gain, and then looks like long here for a loss. Long here for a loss, and then a scratch there. Somewhere I was up. Oh, I see. It was back here. So between the these little mouse bite gains, I was up 200. Ended up on the day 55. So I have whenever that happens, you get up $200-300, and you end up giving a fair amount of that back. I always get the email, why don't you stop trading after you make a certain amount? And the answer is, well, we don't want to limit our upside. I do have in the system here the ability to specify, if you hit X amount, stop, don't take any more trades. So you can do that. You can see mine set just ridiculously high. On this kind of day when it's super volatile, you're basically either going to take a max loss, or you have the opportunity to do really just amazingly well. I certainly don't want to limit it. All right. When the markets are quieter, and $200 is a really good day, then sure, change it. But this is not that kind of environment. This kind of environment, you either stand aside and don't trade at all, or you go for it. This is home run territory now. Okay, so we give some back here, scratch there, starts to go sideways, and let's see, we take a short there. There's another 10 ticks given back. Here's the other place that's just really painful, is right here. All right, so we come out of the you can't go to the short side here on this bar. Okay, and then we get a 286, which is a short, and then a 213, which is a short. That's the bar right there where we place the order. Okay, so the blue means you can't get long, but we're out of because we're setting these, this low here is far enough away, or this low here is far enough away. We can take a shorts now, and the problem here is that we don't get filled. All right, so that bar closes here. We place an order right one tick back, and it just doesn't come back. All right, and you can see what we missed. This is just immensely painful to miss this. For a single contract, that's this looks like it's pulling back just a hint more than 20 ticks again, so you're going to get taken out right there. So assuming you can get filled up in here somewhere, 2150 down to it's 9 points. You don't want to catch 9 points. You want to catch that whole move, and that's why we don't like this the 20 tick trail. Yeah, but it's difficult because on the days when the market's not moving very much, then you give back too much. And other days when it's pretty wild, it's the same problem. So you just got to make a choice and live with it. Kind of what we're looking for is the case where you get in, and then you break through here, you add, and then you don't get a deep enough pullback to hurt you. It comes down to your tolerance for kind of like you saw back here, getting taken out and missing the move. All right, everyone's a little bit different. If this just absolutely drives you batty compared to giving back an extra 10 ticks, if the market does turn here, then your choice is obvious. All right, there is no single answer that's always best. All right, it just comes down to you. So let's see, and then chop. So we missed this beautiful long fall here, beautifully signaled. The other thing that's nice about this when we get into these volatile times, we start to see these clusters, 251, 286, 213. So those of you that are not auto trading but are looking, you're standing back on a day that's this volatile, you start to see those clusters, and that's really a useful piece of information to help you understand. Okay, it's time to find that short. And then let's see what else happens here. Hard fall there, chop chop. You can see here that this 251 is a short. I don't quite understand why I didn't take that trade. I'd expect there to be an arrow right there. I wouldn't get filled. I can see that. That's a short. This 251, the background's red, no shorts, so we're protected from that. As it happens, what would have happened? Yeah, okay, so we would have gotten short on that bar and taken a loss. So that's the chop avoidance protecting us here. Clearly choppy here, and then I'm done. I'm done right there. So this is painful. So there's a 251 there. So that's a break. This is a really difficult trade for a human to take. That's a break of that level. The prediction is that it will fail. So you can see this is the one I was talking about earlier, where you get in up here and then you break through there, you add, and then you just ride that all the way down. It's something that I've been considering is trading longer than 9 o'clock on these super volatile days. I don't quite have enough experience, and the reason I'm considering that is that the chop avoidance algorithms appear to be keeping me out of trouble. All right, so again, on a day like today, we're interested in kind of just staying in the game so that we can catch that trade. But I haven't done enough study. I don't have enough data to say, okay, yeah, go ahead and trade through past 9 o'clock. So the data clearly shows that the most of the movement's in the first 2 hours, and then you get another spurt there at the end, the last hour. But when the markets are like this, then there is no doldrums, right? The market's moving the entire time. So it's something to think about. It needs a little more study. I'm not the type of trader that will just see something and then do it. I have to go analyze it and then understand it at a much larger level, not just a single day. So I did some initial work as I was developing the wave delta chop avoidance. WDCA is what it's called. And it looked okay. You could continue to trade because it does a good job when the market quiets down in the doldrums. It does a decent enough job keeping you out of the market when it's just choppy and sideways. But it needs more study. So that's on the list to do, and we'll get there. So anyway, this is a case where there's as a single contract trader, if you can get filled here on this turn here, 251. That's a full 2 contracts at 80 ticks, so that's $800 right there. Just the way that works, you'll break through here, you'll add, there's no 20 tick pullback, and you'll ride that all the way down into here somewhere. You'll get, if you want to do the math exactly, it would be, let's call it, you get filled at 20 just to make the math easy. And then you're going to get filled at, say, 10. Okay, so your 15 is the average, so you're aiming for 20 points. So 15 is 05 is 95. You're gonna get, your exits are gonna be right there for 20 points on 2 contracts. So not in the cards for me today since I had already stopped trading. Let's take a look at the rest of this. No signals here. A 185 here where you're going to take a loss. A 151 where you're not going to. It's no trades. That's purple. 187 is too aggressive. We won't take that. 185. That's a loss there. Nothing there. And then we start to fall. So the 240 again. The 241 here. You're going to take that and be loving life there. That it depends on. I'm not sure if you'll get an add off here or not. 1, 2. It depends on the speed. So there's no break there to add. But you can see that it's the same thing, right? So if you're willing to sit through the a loss there, then you're going to get a beautiful trade right there. 254. So we're at 10:30 now. 254, but purple, so no trades. 141, no trade there. 287 is too aggressive. 213, you're going to short that, and you're going to get stopped out by a couple of ticks. That's going to hurt. And then, let's see, the 286 comes along, and you're going to short that right there. And that's another beautiful fall for you. So there's a lot to be made here. It'd be interesting to run this in replay through the whole day and see how it actually works out. It's really easy to kind of miss the ones that would be losses. You want to make sure you're not exceeding your daily loss limit accidentally as you're looking at this. So for members, definitely, I would suggest running this as a replay through the whole day. Up to 12:30 would be probably the best time to stop. 30 minutes before the close, and then kind of see. But what we need to do and we'll do it as a group, is do our baseline tests against the entire day's range for a 3-month period of time. So we'll take the M contract and do using the chop avoidance now. We'll instead of baselining it from 6:35 to 9, we'll go 6:35 to 12:30 and see what the results are. And so there's no need to guess, right? We'll get actual real data across a long enough period of time that you can draw a significant conclusion. And the only difference is that it can be difficult to capture the nuance of a really volatile day, and so it's important to understand if we're back into super volatile times, there'll be whole blocks of time where we can see that. But if it's just a handful of days, and we're gonna want to look at those individually. Okay, so let's see what tomorrow brings. This is certainly not quiet summer trading that we're seeing here. And I'm really curious to see how we end out the week. Let's take a look at the daily chart here. So we ended up right at 7,000 here. So significant support, a key level here. And then on the weekly, we are looking grim. All right. So if we close below that blue line, that's a pretty big sell signal for the markets. We'll see. I mean, a lot of this is just driven by. Or I think it's driven by just the political rhetoric. So who knows? That can change in a heartbeat. All right. So we'll see what tomorrow brings. We're gonna, just continue to navigate the dangerous waters. And I kind of like what I'm seeing in terms of I'm staying alive, and I'm there to take advantage of the opportunity if I can get it. All right. So like today, I missed it. I missed the that nice fall. Not that one. This one here. I missed that just because it's I didn't get filled. So all right, we'll see what tomorrow brings.